The Pi network has captivated the attention of the cryptocurrency community with its unique approach to mining. Unlike traditional cryptocurrencies that require significant computational power and energy consumption, Pi network allows users to mine Pi coins using their mobile phones. This innovative method has made cryptocurrency mining accessible to a broader audience, democratizing the process and attracting millions of users worldwide. And its bold claim of a $314,159 global consensus value per Pi. This figure, which mirrors the mathematical constant Pi, has been a topic of intense debate within the crypto community. This ambitious figure, inspired by the mathematical constant Pi, has sparked both excitement and skepticism among investors and enthusiasts. Some see it as a revolutionary valuation model, while others view it as overly optimistic and detached from market realities. The network, still in its early stages, faces the challenge of transforming its theoretical value into a tangible reality. The journey from concept to execution is fraught with obstacles, and the Pi network must navigate these carefully to achieve its lofty goals. This essay delves into the origins of the $314,159 GCV hypothesis, exploring the rationale behind such a precise and ambitious valuation, examines the current market status of Pi, analyzing its performance since its inception and the factors influencing its market behavior, and explores the factors that will ultimately determine its success. These include user adoption rates, technological advancements, and the ability to create a sustainable and scalable ecosystem. Despite the hype surrounding the GCV, the current market price of Pi paints a different picture. The disparity between the projected value and the actual trading price has led to a mix of optimism and caution among stakeholders. Since its mainnet launch in February 2025, Pi has experienced a significant price correction, trading at a fraction of its purported value. This correction has been a reality check for many, highlighting the volatile nature of the cryptocurrency market. This discrepancy highlights the importance of understanding the dynamics of the cryptocurrency market, where speculation and hype often overshadow fundamental factors. Investors must be cautious and well-informed to navigate this complex landscape. As the Pi network continues to evolve, its true value will depend on its ability to overcome several hurdles, including regulatory scrutiny, technological challenges, and the need to build a robust and supportive ecosystem, and the development of a robust ecosystem. The success of Pi network will hinge on its ability to innovate and adapt to the ever-changing landscape of digital currencies. The road ahead for Pi network is fraught with uncertainties, but also holds the potential for groundbreaking innovation in the world of cryptocurrency. The coming years will be crucial in determining whether Pi can live up to its ambitious valuation and become a significant player in the digital currency space. The origins of the $314,159 GCV hypothesis can be traced back to the early days of the Pi network, where speculation and anticipation ran high among its growing community. The Pi network, envisioned as a user-friendly and inclusive digital currency, quickly garnered attention from enthusiasts and early adopters. Fueled by the project's ambition to create a widely accessible digital currency, some proponents drew parallels between the mathematical constant Pi and the network's potential value. This connection was not just a whimsical idea, but a reflection of the community's hope for a revolutionary financial system. The figure of $314,159, a numerical representation of Pi, emerged as a symbolic target, reflecting the aspiration to achieve widespread adoption and impact. This figure became a rallying point, symbolizing the community's collective dream. However, it's crucial to note that the Pi core team has never officially endorsed the $314,159 figure. This number, while captivating, remains a product of community speculation rather than an official projection. This distinction is vital in understanding that the GCV hypothesis, while intriguing, lacks concrete backing from the project's creators. The Pi core team has consistently emphasized the importance of realistic expectations and cautioned against speculative valuations. The absence of a clear framework or mechanism for implementing such a fixed valuation further adds to the uncertainty surrounding the GCV claim. Without a structured approach or official roadmap, the $314,159 figure remains speculative at best. While the $314,159 figure may hold symbolic significance for some within the Pi network community, it is essential to recognize it as a representation of hope rather than a guaranteed outcome. It's essential to approach it with a critical and informed perspective. Engaging in thorough research and understanding the broader context of cryptocurrency valuation can help mitigate unrealistic expectations. The true value of Pi, like any other cryptocurrency, will ultimately be determined by a complex interplay of factors, including market demand, technological development, regulatory landscape, and overall adoption. These elements collectively shape the financial ecosystem in which Pi operates, making its future value a dynamic and evolving figure. The highly anticipated mainnet launch of Pi Network in February 2025 marked a pivotal moment for the project, transitioning it from a theoretical concept to a live trading environment. The launch, accompanied by a significant airdrop valued at $12.6 billion, generated considerable excitement and speculation about Pi's potential market performance. However, the initial euphoria was met with a dose of reality as Pi's price on exchanges like OKX settled at 66.8 cents, a stark contrast to the widely circulated GCV hypothesis. This price discrepancy underscores the disconnect between speculative valuations and the forces that govern cryptocurrency markets. While the $314,159 GCV might have captured the imagination of some, the actual market price reflects a more nuanced reality shaped by supply and demand dynamics, investor sentiment, and broader market trends. The Pi Network's journey is still in its infancy, and its current market price is far from indicative of its long-term potential. Nevertheless, the initial price performance serves as a crucial reminder that the cryptocurrency market operates on its own terms, often defying even the most ardent predictions and expectations. Section 4. The Invisible Hand guides Pi's value, understanding market forces. The price of Pi, like any other asset traded in a free market, is ultimately determined by the invisible hand of supply and demand. This fundamental economic principle dictates that when the supply of an asset exceeds its demand, the price tends to fall, and conversely, when demand outstrips supply, the price rises. In the context of Pi Network, this means that the widely speculated GCV of $314,159 holds little weight unless it aligns with the actual market dynamics. Several factors influence the supply and demand equation for Pi. The total supply of Pi is capped at 100 billion, a significant portion of which has already been distributed through mining rewards. This large circulating supply, coupled with the relatively nascent stage of the Pi network ecosystem, creates a scenario where the available supply might outweigh the current demand, putting downward pressure on the price. Furthermore, external factors such as overall market sentiment, regulatory developments, and competition from other cryptocurrencies also play a role in shaping Pi's price trajectory. Understanding these market forces is crucial for both investors and enthusiasts to make informed decisions and navigate the often volatile world of cryptocurrency trading. Section 5. The $314,159 question, why a fixed GCV faces uphill battles. The notion of a fixed global consensus value, GCV, of $314,159 for Pi, while alluring in its simplicity, presents significant challenges and raises fundamental questions about its feasibility in a decentralized and dynamic market. The cryptocurrency landscape is inherently volatile, with prices that can swing dramatically within short periods. This volatility is driven by a myriad of factors including market sentiment, technological advancements, and macroeconomic trends. Attempting to enforce such a fixed price would require mechanisms that contradict the fundamental principles of free market economics, where prices fluctuate based on supply and demand. In a free market, prices are determined by the collective actions of buyers and sellers, each making decisions based on their own information and expectations. Any attempt to fix a price would disrupt this natural equilibrium. One of the primary obstacles lies in the decentralized nature of cryptocurrency markets. Decentralization means that no single entity has control over the entire network, making it difficult to implement and enforce a fixed price. This is in stark contrast to traditional financial systems, where central banks and regulatory bodies can exert significant influence. Unlike traditional assets, where central authorities can influence prices through monetary policy or market interventions, cryptocurrencies operate on decentralized networks, making it virtually impossible to dictate a fixed value unilaterally. The decentralized nature of cryptocurrencies is one of their core strengths, providing resilience and security, but it also means that price control is not feasible. Even if the Pi core team were to implement mechanisms to maintain the GCV, external factors such as trading activity on exchanges, overall market sentiment, and regulatory changes could easily disrupt the intended price stability. The cryptocurrency market is influenced by a wide range of external factors, many of which are beyond the control of any single entity. Moreover, enforcing a fixed GCV could create unintended consequences, potentially hindering the organic growth and adoption of the Pi network. A fixed price could lead to market distortions, where the perceived value of Pi does not align with its actual utility and demand. A predetermined price might discourage new users from joining the network if they perceive it as overvalued, limiting the network's ability to grow and attract new participants. New users are crucial for the expansion and success of any cryptocurrency network. While existing users might be reluctant to transact with Pi if its fixed value doesn't reflect its actual purchasing power in the market, this reluctance could stifle the network's transactional activity, reducing its overall utility and effectiveness as a medium of exchange.